You placed the trade. You did everything right. You followed the pattern, waited for confirmation, set your stop. Then what happened? The market kissed your stop loss and flew the other way. Sounds familiar? You think you're trading the charts. But in reality, you're just feeding the beast. The beast that feeds on liquidity. That hunts for your stops.
You're going to see a structure like this, okay? Perfect. So you want to wait for a change of character, right? Get slow. On the 15-minute time frame, okay? It could be a single candle or it could be a low like this. It just have to be a structure. So it could be a bearish candle, and that would be considered as a structure as well, or a low as well. Or it could be this. And I'm going to show you the example. It's going to be clear to you guys. So once you have a market such a shift or change of collector, there are two things that you can do. You can take your entry from the closest fair value gap. I do not recommend that. If you fear on missing out the trade, then you should take your entry from the closest fair value gap and put your stop loss at the high, okay? Suppose that. But just like me, if you want to take your entry from the extreme order block, in this strategy, I do not take my entries from the fair value gap. I take my entries from the extreme order blocks, okay? So take entry from extreme order block. Very simple, guys, okay? So yeah, once you have your entry here, you put your stop loss at the high, okay? And you target the low of the B leg, okay? Very simple. So price is going to go into your level and it's going to go down. Okay, thus, so here's an example number one. As you can see, we have the here leg, then we got the B leg, and we are on our way to the C leg. So before the C leg is complete, you want to draw down the line, right? You want to wait for a liquidity sweep. So price sweeps to the beta right around here. You want to go down to the 15-minute time frame, and you want to spot the structure that was created before price swept the liquidity. So as you can see, price swept before sweeping a liquidity, price left structure, right? It was not created after patching the line. It was not created after sweeping the liquidity, but it was created before price went and took the liquidity, right? As you can see, we have the boom, boom, and then we have a Dutch. So this is a structure. So you wait for this, for the price to break the structure. And boom, this is your market structure break. Now, if I go here, you can see there's a tiny bit of imbalance around this level. So what I would do is I would mark out this auto block, right? And I would put my stop right below there. Because on the smaller time frame, there could be, some fair value gap around this level, or there could be an auto block here. So I want to be safe, okay? So I put my stop look at the low. And I take my entry here, put my stop loss right below this level, and my take profit level would be the high of the B leg, right? Remember, we have the A, B, C, right? So let's see if we get our entry, just my lad. And I take my profits here. So let's see. We got our entry. If I play this through, boom. So look how price moves, right? This is all algorithm, guys. You see how price swept the liquidity. There was some wick offer going on around here, and then we have a beautiful push to the upside.